Good morning, everyone, and you're very welcome to today's webinar. For those of you who have logged on in the last few minutes, we have already completed a sound test, and thanks to everyone who helped out with that. So first, I want to introduce ourselves. My name is Rachel Hines, and I'm the Marketing Manager here at Thesaurus Software. And also joined by me today is Karen Bennett, who is the Chief Commercial Officer at Thesaurus Software. First up on the agenda for today, we have Where Are We Now? And in this part of the webinar, we will look at what changes have been made to the Employment Wage Subsidy Scheme to date this year. With the new lockdown restrictions in effect since January, some businesses are just now availing of the EWSS for the very first time. And so, as well as looking at the changes to the scheme, we are also going to go through a quick recap of the scheme as a whole. I'm not going to demonstrate the EWSS process in Thesaurus Payroll Manager and BrightPay during today's webinar, but I will include short videos on this in an email later today. Part 2 of today's webinar is Key Lessons Learned, where we will look at some of the key lessons that payroll processors have learned over the past year. And finally, we will look at practical guidance on how to use BrightPay Connect and Thesaurus Connect to its full potential to improve the efficiency of your payroll as we continue to process payroll in a pandemic. Finally, at the end of the webinar, we will have a questions and answers section where we will answer any questions that you may have. For our questions and answers section, we will have Paul Byrne, who is the Managing Director here at Thesaurus Software, Audrey Mooney, who is the Customer Support Manager, and Laura Murphy, who is our Chief HR Officer. If you do have any questions, you can type them into the questions box on your control panel at the side of the screen, and we will try to get through as many questions as possible. Just to note, we do have a lot of attendees logged on to today's webinar, so we won't have a chance to answer every single question. This webinar is being recorded, and all attendees will receive an email later today with a link to the recording of the webinar, so it's no problem if you do need to leave at any stage. Also in the email later today, there will be a copy of the presentation slides that we are using today, or you can also download the slides right now if you wish on the Handouts tab of your control panel. In the follow-up email later today, we will include some useful documents and additional resources that you may find helpful, such as the videos on the EWSS process in our payroll software. So now that all the housekeeping is out of the way, we may as well get straight into the webinar, and I'll pass you over to Karen for the recap of the Temporary Wage Subsidy Scheme.
Good morning, everyone, and thanks, Rachel. I suppose to start off, back in March of last year, the Temporary Wage Subsidy Scheme was introduced, enabling employers that were affected by the pandemic to receive a subsidy from the government in a bid to keep their employees on the payroll throughout the pandemic. The Temporary Wage Subsidy Scheme, also known as TWSS, was in operation from the 26th of March to the 31st of August 2020. During the first few weeks of the scheme, known as the transitional phase, Revenue refunded a flat rate of €410 per employee per week. Now, in a lot of cases, this amount exceeded the subsidy that the employee was entitled to receive. Although this transitional phase ended on the 3rd of May 2020, Revenue are still working on the reconciliation process to rectify any overpayments. There are 2 stages to the TWSS reconciliation process. For stage 1, employers were required to report the actual subsidy that they paid to employees on each pay date, and the deadline for submitting this to Revenue was the 31st of August or October 2020. Stage 2 of the reconciliation process has been postponed once again, and at the moment it is expected that this stage will commence mid-March. During this stage, the total subsidy amounts paid to employees will be compared against the subsidy amounts paid to the employer. Revenue will then determine the amounts of the TWSS owed back to revenue from employers. After the reconciliation has been completed by revenue, a statement of account will be sent to your ROS inbox, and employers will be given a deadline to review the detailed information and accept the reconciliation amounts. Once you have accepted the reconciliation calculation, you will either be paid any additional amount due to you by revenue or be required to repay any amount that you owe to revenue. Back over to you, Rachel.
A second update in relation to the TWSS is in relation to employee tax bills. Like other welfare payments such as the state pension and maternity benefit, TWSS payments are subject to both income tax and USC. However, when it was paid out to employees, the subsidy was processed through the payroll as a non-taxable addition, therefore giving rise to a tax liability at year end. This method in which the TWSS was processed meant that many employees are now facing tax shortfalls. While revenue have been clear from the start that there would be a tax implication with the subsidies, many workers were unaware of the extent of these bills or even that they would face them. Revenue issued preliminary end-of-year statements to all PAYE workers on the 15th of January through my account, and these statements reflected any overpayments or underpayments for 2020. For some employees, the shortfall was substantial. For someone who received the average payment of €280 per week for the duration of the scheme, the estimated amount owed to revenue is €1,200. While employees can ignore the bills for the time being by simply not logging into their account, Revenue have said that they will issue letters to all those that are due refunds or face tax bills towards the end of the first quarter. Employees will have a number of choices if they do have a shortfall. Workers will have the option to make the payment through my account, either in full or through instalments. They can also choose to pay by reducing their tax credits for up to 4 years, starting from 2022. No interest will be collected on these payments, and this applies to a maximum liability of €6,000. And if a taxpayer owes more than this, they will have to pay for the remainder through the online system. Employees can also attempt to reduce their tax bill by claiming tax credits, such as medical expenses. And Revenue have also announced that they will facilitate employers who wish to pay the employees' 2020 tax liabilities. And this applies to income tax and USC liabilities, which arise due to the Temporary Wage Subsidy Scheme. The tax liability arising can be paid by the employer by either of the following methods. A payment can be made by the employer directly to the employee with respect to the TWSS tax liability due. The employee must then pay their liability to Revenue through BrightPay. Or option 2, the last payroll submission of 2020 may be amended by the employer, such to include additional income tax paid and USC paid that equals the liability shown on the preliminary end-of-year statement. The employer will then need to pay the additional amounts that are notified via a revised monthly statement issued by Revenue. The employee's preliminary end-of-year statement will be recalculated to show the additional income tax and USC liabilities paid directly by the employer. And I suppose just to add, we won't be catering for the option to amend the payroll submissions. We strongly believe that the other option is the best, and we do feel it's better to leave the payroll submissions correctly reflecting what happened in 2020. So our advice would be to make the payment directly to the employee. I'm going to pass you back to Karen again for a recap of the Employment Wage Subsidy Scheme.
Thank you. So fortunately for employees, the Temporary Wage Subsidy Scheme was subsequently replaced by the Employment Wage Subsidy Scheme, which does not have the same tax issues. EWSS is a subsidy paid to an employer. It will not show up on a payslip or in my account. The EWSS provides a flat rate subsidy to qualifying employers based on the number of paid and eligible employees on the employer's payroll. EWSS payments of 392 million were paid to 35,600 employers in respect of 343,800 employees in the month of January. At the moment, the scheme is due to end on the 31st of March 2021, but it is expected that the scheme will be extended soon. The first update on the EWSS is in relation to scheme eligibility. Businesses are now required to compare financial projections for the period from January to June 2021 to actual reported turnover for the same period in 2019. Revenue have said that reasonable evidence-based assumptions must be made to prepare the projections which form the basis of the eligibility review. Businesses must expect to experience a 30% reduction in turnover or customer orders between the 1st of January and the 30th of June 2021, again comparing with the actual reported turnover or customer orders during the same period in 2019 in order to be eligible for the scheme. As was the case previously, employers must review their eligibility status on the last day of every month to ensure they continue to meet the eligibility criteria. If they no longer qualify, they should deregister for EWSS with effect from the following day, that being the 1st of the month. If an employer is no longer registered, the EWSS marker should not be included in payroll submissions. Subsidies correctly claimed in accordance with the terms and conditions of the scheme prior to deregistration will not be repayable. If circumstances change the following month and the employer is again eligible, they can re-register and claim from the date of re-registration. It is not possible to backdate the claim to include the period of deregistration, as that correctly reflected the employer's expectation at that time. The second update to the EWSS is in relation to pay rates. Under the EWSS, employers receive a flat rate subsidy per employee per week, depending on the employee's gross weekly pay. For the first few months of the scheme, the subsidy payable was €203 or €151.50, depending on the employee's gross weekly earnings. However, in October, the subsidy rates increased, ranging between €203 and €350. These revised rates of the subsidy provided by the EWSS will remain in place until the 31st of March 2021. The subsidy is not available for employees whose gross weekly earnings are less than €151.50 or greater than €1,462. Back to you, Rachel.
Thanks, Karen. So next I'm going to look at how the EWSS works in payroll software. Where the scheme is being operated, an indicator will be included on the payroll submission to Revenue to indicate which employees you wish to claim EWSS for. On receipt of the submission, Revenue will calculate the subsidy payable based on the employee's gross pay, the pay frequency, and the insurable weeks. EWSS payments will generally be paid into the designated bank accounts of eligible employers within 2 working days after receipt of the payroll submission. There continues to be a 0.5% rate of employer PRSI, which applies for employments that are eligible for the subsidy payment. Employer PRSI must be calculated as normal via the payroll, so for example on PRSI class A1. Revenue will subsequently calculate the PRSI credit by calculating the difference between the employee's rate reported via the payroll submission and the 0.5% rate. This credit will then show on the statement of account within ROS and reduce the employer's liability to Revenue. That's essentially how the scheme operates in payroll. As I mentioned at the start of the webinar, I'm not going to demonstrate how it works in the software today, as I know that many attendees on today's webinar have already been operating the scheme for many months. But for those of you who are new to availing of the EWSS, we will include a short video in the follow-up email later today showing you the EWSS process in both Thesaurus Payroll Manager and BrightPay. Moving on now to a few hot topics. One area of confusion recently has been in relation to a difference in the subsidy being received and what's due to be paid to employees. In some scenarios, the employer will receive a subsidy greater than the wages they are paying. They will not have to repay this money to Revenue, and the employees should only be paid the wages that they are due and not anything extra. In other scenarios, the subsidy received from Revenue will be less than the wages that they are paying. Another hot topic at the moment is the pandemic unemployment payment, and if anything needs to be done in the payroll. Where an employee is claiming PUP, you need to change the employee's payment to 0 and continue to update them with the 0 pay until such a time as you are paying them wages again. One key change to the pandemic unemployment payment for 2021 is that it is now being taxed in real time in line with other taxable DSP payments. This means that payments will be factored into the tax credits and rate band of PUP recipients and their jointly assessed spouses to collect tax due on the PUP in 2021. Any tax due is collected by reducing the person's tax credits and rate band. To do this, Revenue annualises the weekly amount of PUP by multiplying the weekly amount by 52, and the annual tax credits and rate band are reduced by this amount. The adjusted tax credits and rate band are applied on a week 1 basis, and when an employee returns to work, Revenue will adjust the RPN, taking account of the actual amount of PUP received. These RPNs will remain on a week 1, month 1 basis for the remainder of the year, unless a caseworker determines that it's okay to move them back to a cumulative basis. As always, employers must use the RPNs issued by Revenue. They cannot deviate from this. On February the 1st, there were 479,000 people on PUP, so there's a substantial amount of amended RPNs being issued at the moment as a result. And I'll pass you back to Karen again.
Okay, so looking back at our agenda, next we're going to have a look at some of the key lessons that payroll processors have learned over the past year. If there's anything that lockdown and the requirement to work from home has taught us, it's the importance of remote access. The current restrictions are expected to remain in place until Easter. It will likely be summer before pubs, restaurants and hotels can open, and a broader return to offices is unlikely to be realistic until a large proportion of the population has received one of the approved vaccines. I think it's clear to say that remote working will be part of the next normal, or at least a hybrid model of working some days from the office and the other days from home. Now, looking at how this affects payroll, in addition to being able to process payroll in the office or from your business premises, you now not only want, but need to be able to access your payroll data from home. Payroll is one of the core functions of running any business, so it's something that needs to be completed on time and without errors. This remote access requirement is especially true for accountants and payroll bureaus processing payroll for a number of clients. If there are, for example, 5 of you all processing payroll for various clients, you need to be able to process the payroll from all 5 homes, and also without the risk of creating conflicting copies. Your payroll software should easily facilitate remote working with additional user access. Both Thesaurus Payroll Manager and BrightPay can be installed on up to 10 PCs per license key. And this means that payroll processing is possible for up to 10 users or from 10 different locations. This is very handy if you have a number of employees working from home, all needing to access the payroll software. We have also introduced new multi-user features that work in conjunction with our optional cloud add-on Connect to improve the working from home experience. Connect can be used with both Thesaurus Payroll Manager and BrightPay, so these new features are available with both systems. We now have a version checking feature when opening an employer file, and secondly, we have an other users check feature when opening an employer file. I'll pass you back over to Rachel, who's going to show you quickly how this works.
Thanks, Karen. So first I'll show you these features in Thesaurus Payroll Manager. And when you open an employer, Thesaurus Connect will check to see if there is a more up-to-date version of the employer file. So in other words, where someone else in your organization worked on this employer, or maybe even you worked on the employer from a different computer. If a more up-to-date version is available, you will be given the option to use the latest version, or you may also decide to ignore the latest version and continue working on the version that you are trying to open. You will also be told if someone else is still working on the employer. And in this instance, Thesaurus Payroll Manager can notify you when the other user closes out of the payroll, and it will also tell the other user that you are waiting to access the payroll. The second option here is to force the other user out of the employer file, and that user will get an email notification letting them know that you have done this. Next is BrightPay Payroll, working in conjunction with BrightPay Connect, and the functionality is the same, but the screens look a little bit different. When you open BrightPay, it will check for a more up-to-date version of the payroll, and you can download and use the most recent version, or you can continue using my version. And likewise, when another person is currently in the employer file, you can be notified when the other user has finished, or you can choose to continue anyway. If you continue, it will notify the other user and prevent them from syncing any pending changes to BrightPay Connect. And this functionality uses both the payroll software and the Connect add-on in tandem, so you need to be using either Thesaurus Connect or BrightPay Connect to have this functionality. And I suppose the great thing about this new functionality is that it improves the remote working experience, giving you all the benefits of the cloud while using the power and responsiveness of your local device. And back to you again, Karen.
Thank you. Moving on, we have the importance of using reliable software from a reliable company. We all know that the past year has been very frustrating for payroll processors. Not only had you the added workload of processing subsidy schemes, but you've also had to learn about the schemes. First, we had the employer refund scheme, then both the transitional phase and the operational phase of the temporary wage subsidy scheme. Then there was the EWSS sweepback, and now the Employment Wage Subsidy Scheme. There has been a lot of time involved in learning and keeping up to date with these changes, which were being announced very frequently. At the beginning of COVID, there were times when these changes were even being made every week, and it was very hard to keep up to date with the latest guidance. At Thesaurus Software, we kept both Thesaurus Payroll Manager and BrightPay up to date to cater for the relevant scheme changes. And we really tried to automate as much as possible in the payroll software to make your life easier. Thesaurus Payroll Manager simplified the EWSS process with the ability to batch start and stop claiming the subsidy for all employees simultaneously. Both Thesaurus and BrightPay have alerts notifying you if an employee has the EWSS tick box ticked, but in fact is not eligible to be claimed for. And in this instance, both systems will not include the EWSS marker on the PSR to revenue. In a recent survey, we achieved a 98.7% rating for our overall handling of COVID-19, including our customer support, our payroll upgrades, these COVID-19 webinars, and our online support. We also won a COVID-19 Hero Award for suppliers, and this is because of our response to COVID-19 and how we've tried to help our customers throughout the past few months. The judges recognised that we went above and beyond to support our customers at a time when they were under immense pressure with government changes and trying to interpret the guidance. Over to you, Rachel.
Another key insight gained throughout the past year is the importance of payroll backups. As most businesses are now working remotely for the foreseeable future, it leaves many businesses exposed to data loss. Data security is extremely important in today's world. The introduction of the GDPR not only introduced employer duties, but it also made everyone much more aware of the importance of data protection. If you only keep your payroll data on your desktop, you are at risk of losing the information. Have you thought about what would happen if your computer broke down or was hacked? How would you get your payroll data back quickly? Would employees still get paid if the information was lost? One of the main advantages of having cloud access is that you can back up your payroll data instantly. Connect will automatically back up your payroll data to the cloud, allowing you to restore your payroll data should the unforeseen happen. It's simply an added layer of data protection to safeguard your payroll data. If you are not using the Connect add-on, just make sure that you are creating manual backups known as snapshots in BrightPay, or with Thesaurus Payroll Manager, you are prompted to take a backup after sending the PSR to revenue. It is always recommended to take a backup of your payroll to an external location, so for example, to an external drive, server, or cloud environment, rather than just on your PC. This ensures that the payroll data is saved elsewhere and can be reinstated in the event that you suffer a PC breakdown or crash. With Thesaurus Payroll Manager, Bureau users will also have the option to back up all companies on file at the same time. This facilitates a one-off backup function and saves the user time-consuming tasks of backing up all companies individually. And I'll pass you back to Karen for the fourth point.
So the final eye-opener that we're going to look at today is the importance of automation. Whether you're an employer processing payroll in-house for your business or an accountant or bureau processing payroll for a number of clients, I think it's clear to say that payroll processors across the country have had an added workload this year. With the added time required to process subsidy payments, and as we touched on a few minutes ago, trying to keep up to date with government schemes, there has been an awful lot of time involved. It's important to eliminate many admin-heavy tasks to try to counteract the time spent learning about these schemes. Looking at payroll alone, how much time do you spend on admin payroll tasks such as managing annual leave, answering employee leave balance inquiries, retrieving lost payslips, or communicating with employees in general? In the new normal, employers and employees expect to access their payroll information in the cloud. Self-service online portals are changing the way that businesses interact and communicate with their employees, whilst providing the cloud functionality to get things done smarter and faster. Our Connect add-on includes the ability to manage employee leave, communicate with employees, automate payslip distribution, run payroll reports, and so much more. Now, we do know that half of all attendees watching today's webinar are accountants or payroll bureaus who process payroll for clients. And Connect can also be very beneficial to you. With BrightPay Connect, you can invite your clients to their own online client dashboard where they can upload employee hours and payroll information. They can actually approve the payroll run before it's finalized, notify you of new starters, access all employee payslips, they can run their own payroll reports, and view amounts due to revenue. So now is the perfect time to introduce new processes and make the leap to automated payroll workflows that really do save time. And then back over to you, Rachel.
Thanks, Karen. So this brings me nicely into section 3 of today's webinar, which is practical guidance on how you can use Connect to its full potential to improve the efficiency of your payroll. So rather than talk to you about what Connect can do, I'm going to jump into the software to show you how it works. And I know some of you on today's webinar are already using Connect, and if you are, feel free to go and make a quick cup of tea or coffee. It should only really take a couple of minutes, and then we'll get to the questions and answers. So I know we've touched on Connect a few times throughout the webinar, but just to explain it a little bit more, Connect is an optional add-on that works alongside both BrightPay Payroll and Thesaurus Payroll Manager. The payroll is still processed on the desktop application, but the payroll information is stored online on a secure cloud server. So here we are in the online employer dashboard, and it looks the same with both BrightPay Connect and Thesaurus Connect. I suppose just to add as well that there are some differences in how Connect works with both Thesaurus and BrightPay, but for the most part it's very similar. So the first thing we come to here is notifications. And here I have an annual leave request from an employee, and I can approve or reject the leave from my online employer dashboard. Also on the notifications panel, we have a request to approve the payroll and another to submit the payroll entry. So these two notifications are only really applicable to payroll bureaus and accountants, where you can request the information from your clients and the client can log in to submit the data or approve the payroll run. It's also important to note that this is probably the key difference between BrightPay Connect and Thesaurus Connect. This bureau functionality to request the payroll and approve the payroll run is only available with BrightPay Connect and not Thesaurus Connect. So you'll see these tabs across the top of the screen, and the first one here is Employees. And here you can click into each individual employee's profile to access payslips, and payslips will automatically be available on Connect as soon as the payroll is finalised. So there's no need for you to print or email payslips. Connect distributes the payslips to employees automatically for you. The next tab here is Reports, and any report that is set up and saved on the payroll software will be available for you to run payroll reports on your online employer dashboard. Connect also has a company-wide employee calendar to simplify annual leave management. So you can view all past and scheduled leave for employees, and when leave is added to the calendar, it will automatically synchronize to BrightPay on your desktop. Revenue payments also flow through from the payroll software to Connect, which means that you can log in to your online employer dashboard to view exactly how much you owe to revenue. The final tab then is Documents, and here you can upload any type of document that you want to distribute to your employees, such as a contract of employment or a company handbook, or even the likes of COVID policies and procedures. Documents and resources can be distributed to all employees, to employees in a particular department, or even individual employees. And you can send notifications to employees and monitor the date and timestamp of when the employee accessed the resource or document. So that's the online employer dashboard, and employees also have access to a self-service portal which they can log into on an internet browser or on a smartphone and tablet app. And the app is available to download for free on any Android or iOS device. The employee will receive a notification on their device when a new payslip is available, and they'll also get a notification when a HR document has been shared with them or when an annual leave request has been approved. If I open the app here, the employee can go into the documents to view payroll and HR documents, including a full payslip library. They can view their past and scheduled leave and request leave in the calendar, or they can view and update their personal details to ensure GDPR compliance. So it's a really powerful app with self-service features so that the employees can do a lot of the admin-heavy tasks themselves rather than coming to you, for example, for lost payslips or leave balance inquiries. And finally, just to add that there is an additional charge for using BrightPay Connect and Thesaurus Connect in addition to the payroll software. Connect is priced on a monthly subscription based on usage in that month, so you only pay for what you use. Customers are invoiced monthly in arrears based on the number of employees that you have on your payroll within that month. So for example, if you have 10 employees on your payroll for a particular month, you would be paying just €3.90 for that month. So that brings us to the end of the presentation today. And I know we've covered a lot on today's webinar, but we will send everyone an email later today. And this will include a copy of the slides and a link to the recording of today's webinar. I just want to say also, for those of you who are not using BrightPay, the follow-up email will also include a link to book a demo. So if you're interested in seeing more of BrightPay, the demo will cover the basics of running your payroll on a day-to-day basis, and it will also introduce you to BrightPay Connect and how it works alongside the payroll software with automated backups and online self-service portals. Likewise, if you're already using BrightPay or Thesaurus, We do also run Connect demos, so make sure to book a demo through the follow-up email later today if interested. It's now time for the questions and answers, and if you have any questions, feel free to type them into the questions box, and we will try to get through as many questions as possible. As I mentioned earlier, however, we do have a lot of attendees logged on today, so unfortunately we won't be able to answer every single question, and I see a lot of questions have come in there already today. For our questions and answers today, we have Paul Byrne and Audrey Mooney, and we do also have Laura Murphy in the background for if there's any employment law questions, and Laura is our Chief HR Officer. So Audrey, I know you've been keeping an eye on the questions as they've been coming in. So can I pass it over to you to look after the questions?
Certainly, thanks Rachel, and good morning everyone. So we'll just start off with the questions there. So the first one I see there is if an employee is on the pandemic unemployment payment and there is essential work starting, will taking them back temporarily affect their payments? So Paul, feel free to come in here, but I suppose I would feel that they should cease their pandemic unemployment claim while doing that, carrying out that essential work, and then if required, then start the claim again, when that work ceases.
Yeah, I think I would agree with that. Good morning, everybody. And Audrey, you keep me straight as well on some of the questions I'm going to answer here. Okay.
Okay, we'll keep each other straight. So the next question there, if we hire a new employee in the coming week straight from college, does he qualify for EWSS?
Yeah, well, this comes down, I suppose, to if the employer themselves are eligible for EWSS and the employee is not a connected party as such, well, there should be no problem then.
Yeah, perfect. The next one there is, can qualification for the EWSS be calculated on a monthly basis?
I guess this comes back to, sometimes there's a little bit of confusion about this. At each stage, at the end of each month, you must look at your 6-month period to the end of June. And basically you're comparing that 6 months with the relevant period in 2019. So, every month you make that assessment. You're not comparing 1 month with the corresponding month in the previous year or 2 years ago. You're always comparing the 6-month period. So it's at the end of each month you do that calculation, you do your projections for the remainder of the period and see whether it's still 30% less.
Perfect, thanks Paul.
The next question. I hope that answers the question.
The next question there is just employee tax credit 3,300 less the adjustment for EWSS. It says all of the above correct, but revenue also deducted 18,200 from the rate band. Are they taking a double deduction? So Rachel, I think you covered this in the presentation. So they do annualize the pandemic unemployment payment figures while somebody's in receipt of PUP, but when they're back on the payroll, they will, readjust it and take account of the actual amount of PUP received rather than the annualized figures.
Mm-hmm.
So the next question there is, what is the best way to pay the employee liability?
Yeah, I think as Rachel covered on. Yeah, I mean, it was obviously an option that, we could have programmed it to actually, to do an adjustment to the final PSR, but really there's no need to do that. And I think it would have led to a lot of confusion down the road, because then the PSRs would reflect what actually happened in the year. And it's something that, you can do outside of the payroll. Now, obviously the payment itself is tax-free, so you can still do it as a tax-free or non-taxable addition in the payroll when you're making that payments to the employee. But it is our strong opinion that is the best way of handling those payments. Plus, I mean, I suppose the other human aspect of it, let's say somebody, knows they're going to have a liability of 1,000, say on the TWSS, an employee, say, revenue are automatically going to do that over 4 years starting next year. So the employee may decide, well, okay, I'll get the 1,000 off the employee, I need it for something else, and they'll still be in a position to pay it over the remaining 4 years. Whereas if we do the adjustment to the PSR, it's basically, the employee doesn't have that option, to decide what cash flow suits them best.
Thanks, Paul. So the next one there is just also our employee gave the statement of liability, but it is himself and his wife. They're both assessed together, so the total liability is for the two of them.
Yeah, that's quite complicated, really. You need to be an accountant or a tax advisor really to work out, exactly how much applies to the employee themselves. I suppose, again, you'd be looking at the total amount of the TWSS, and you'd be trying to figure out what the marginal rate is between the husband and wife, and work it out that way. But it is, it is complicated, and I know we've been asked, could we provide some sort of calculator for that? Really, that's tax software as such, which we don't really do. So yeah, it's a difficult one, but I mean, I think all you can do is you do a best estimate and keep a record of that for your records. If you're ever asked to justify how you pay that to the employee.
Perfect, thanks, Paul. The next question there is, under the EWSS scheme, is PAYE, PRSI, etc. payable by the employer? A statement comes every month outlining the amounts outstanding and requesting that they be confirmed. On the ROS site, it says no payment periods are outstanding.
Yeah, I'm not too sure about that one. I'm only guessing that, when it says no payment periods are outstanding, it means they've received the return for those periods. But they're still getting the statement every month, so that's the most important thing.
Yeah. The next question there is, please confirm that there will not be a tax implication for employees at the end of 2021 as a result of EWSS. So no, I mean, there definitely won't. They're getting paid as normal now, paying their tax, USC and PRSI. So there won't be any implications, at the end of the year or early next year.
Yeah, it's important to draw the distinction. Like EWSS is an employer subsidy, so you're running your payroll as normal now, and it's actually the employer that's getting the subsidy for the employee.
Somebody just asking, business closed, do we now do wages weekly in putting in zero as pay? So yes, you would just enter an update with zero pay until such time as you need to repay the employees again. Quite a few questions coming in relation to the TWSS reconciliation. So when will it be available to pay?
Yeah, Audrey, I know Revenue mentioned this in one of our recent calls. Was it the middle of March? That they were suggesting that the... Sorry, go on.
No, I was just going to say, I think they said it would be after St. Patrick's Day, but I think that's, depending on there being no further restrictions or anything like that. I think they're conscious of sending out tax bills when companies are, closed, etc.
Yeah.
The next question there is, I have a client who is director of 2 companies. Are both companies able to claim EWSS for him?
Well, basically, there's no distinction between employees and directors apart from the connected party side of things. But I mean, I don't see any issue if both companies qualify and the payments are within the particular limits that qualify for EWSS. I don't see an issue. Do you, Audrey?
No, I don't know. Once they both qualify, yeah, I don't see any issue with that. The next question there is just in relation to the TWSS overpayment again. So again, it's on hold at the moment, but expected to be sometime after St. Patrick's Day. Somebody's just asking there, we qualify for the EWSS now for the first time in 2021. However, one employee is going for a mortgage and wants to know if this will be shown on his payslip or if the credit institutions can see if he or the company are availing of EWSS.
Well, again, there's nothing on the payslip, unlike the TWSS where we had to include a particular description of the payment. The payslips are now normal payslips. So there is nothing to show on those payslips that EWSS is part of, of the calculation or whatever. It's possible, I suppose, that we have heard that some banks do ask the employee to confirm that the employer themselves aren't availing of EWSS, which I think is very unfair. But I don't know what you would do in that situation.
Yeah, but definitely nothing on the payslip or in my account to show. Okay, Laura, if you're there, I think the next one is for you. So how do you deal with a staff member who attended work while awaiting a COVID test result? The test was positive. This caused an awful lot of upset and worry among staff.
Hi Audrey, morning everybody. Hope you can all hear me. Mostly questions for you and Paul today, Audrey, so I'll come in and give you a bit of a rest on this one. This is an awful situation. I read this a couple of times, and I'm very sorry for your company to have gone through that, and I can only imagine the upset it caused. Hopefully the knock-on effect on other staff wasn't too negative. I suppose to answer the question, then I think it would absolutely be prudent to take some form of action with this employee. We've regularly talked about employers having a duty of care to protect their employees and to take steps in terms of health and safety. But there are obligations on employees in that very same regard, that employees have a duty to comply with the health and safety regulations or stipulations in your company. So I think absolutely some form of, we're a year in now to COVID, so some form of disciplinary action would be okay, would be acceptable, would be what you would probably do in this situation. I suppose in terms of what that disciplinary sanction might be and how far down the disciplinary process it would go will really depend on what, your individual situation and what the mitigating circumstance in terms of what you have done as an employer, in terms how you've communicated norms and what you expect from employees, should this situation arise, how much you've done in terms of the return to work safely protocol that the government have issued, the training that you gave to staff. So all that will kind of depend on the level of the warning that you might give to this employee. But I think it's as tough as the situation it was for you, it's also an interesting case, but looking in on it for other employers, because I think it's a prime example of just how important it is to get your policies out there and to communicate them so clearly. And we can never assume that other people, have that awareness that we do, or perhaps watching the news as much as you are. And it really is when you come into spoon feeding some of this communication to employees, to making sure they know exactly what is expected of them and what you expect of them.
Thanks very much, Laura. Okay, so the next question is a question in relation to an employee who came after getting his tax return. I was operating TWSS from the start, and I was advised when topping up the employee wages to top up an amount to his normal take-home pay. This has resulted the employee with a large tax bill. However, this employee was working throughout the pandemic. This will therefore leave him at a financial loss, as he has a big tax bill but only came out with the same normal salary. This does not seem fair.
Audrey, your
sound is
that's
many of the people in receipt of TWSS were working, but as the subsidy was going through as a non-taxable payment, but it was advised for revenue all along that it was taxable, just not in real time. Unfortunately, that there isn't anything that can be done.
Yeah, I guess it's probably revenue, I suppose, took a very, pragmatic approach in that they wanted to try and get as much funds into the hands of employees during that period as was possible. So, I suppose in compensation for that, they have, obviously done the 4-year deduction from next year onwards for that liability, which, they feel probably kind of compensate for it in some way. But, it was a scramble, I suppose, at the time to try and get as much funds out there as possible. So I'm not trying to defend it. It does seem unfair, but I mean, that's just the way it is, unfortunately.
Thanks, Paul. Just the next question there is, so as employers can now pay the tax and USC liabilities that arise due to TWSS, some employees do not have a preliminary end-of-year statement as they have other income. Can Thesaurus calculate the amount of this liability? The last payment submission for 2020 must be amended to show the income tax and USC paid. Do we have this option? So I think, Paul, we've kind of already covered this one.
Yeah. So if they don't already have a preliminary end-of-year statement, if there is some way of doing a calculation, you know, they know that whatever that employee's margin rate is and how much, you know, their liability is going to be, just keep a note of that for your file so that if, you know, you can justify the payment that is made to the employee. I have to say, you know, not all employers are doing this, and it's very generous of the employers that do, you know, pay those liabilities. But just the thing is just to keep a record so that if you're ever asked to justify, because it is a tax-free payment you're now making to the employee, it's something that doesn't have to be processed through payroll. But you know, if you want to include it as a non-taxable addition in the payroll, that's fine.
Thanks, Paul. The next question there is, where a person is self-employed and then changes to PAYE employment, is it up to the employee or the employer to register the person with the employer for PAYE purposes?
Well, I guess this is something that the payroll does automatically. You know, when you add the employee, that employee into the payroll, and the first time you request an RPN through the payroll, that employee's tax credits and cut-offs will come in on that RPN. So that's the notification really that, you know, that employee started with you in that RPN. So don't know anything else to add to that, Audrey?
No, I suppose they don't have to cease the self-employed in order for the credits to move across or to get the PAYE tax credit or anything, do they?
Well, that's true. I mean, if revenue may not know, I suppose their exact tax status, and they may put them on a week one basis, they may have reduced credits or cut-offs, so it would be up to the employee as opposed to contact revenue to say, look, my self-employment has ceased, and you know, I want all my credits and cut-offs applied, you know, to my employment.
Perfect, thank you. The next question is back to the TWSS reconciliation. So the amount received from revenue is more than the amounts paid. Will this have to be repaid? So yes, I mean, I think this has been stated from you.
Now, I mean, there are, you know, again, I don't know if people are familiar with the debt warehousing scheme, that, you know, that if there are financial difficulties, those particular liabilities can be warehoused as well as other liabilities.
The next question there is, if the employer is paying the employee liability, does this come over the TWSS reconciliation?
No, it has no effect whatsoever on the reconciliation.
Yeah, perfect. The next question there is, we are auctioneers, we have deposits on hand from sales agreed prior to lockdown, which will close and fees will be taken soon. As we are closed for the past 6 weeks and no sign of opening soon, no new sales will follow, which is a knock-on effect on our income. All staff remain on payroll on the EWSS scheme. If we go over for February, but unlikely to go over in March, can we stay on EWSS for now?
Again, just to reiterate, because it is a cause of confusion, it's the 6 months in total that you need to look at. So it doesn't matter whether February or March are good or bad in comparison with the previous, you know, comparative periods. You're looking at the 6 months in total, and it's at that 6 months in total you project to be 30% less, you still qualify, you can stay on the EWSS.
Thanks, Paul.
And just again, if I just add to that, you know, it's obviously an exercise that should be done at the end of February, because you would have done an exercise, or you should have done an exercise at the end of January to determine whether you still qualify under the 30% rule. If you come to the end of February and you do the same exercise and you find that you no longer qualify because you're no longer greater than 30% or over in terms of reduction, you don't have to readjust your February, because you made that determination at the end of January in good faith, and you can still leave your submissions to the end of February as they are, but you then must, you know, you're meant to deregister from the beginning of March then.
Thank you. Is there a default option for paying the TWSS shortfall? For example, if an employee doesn't engage with revenue, is the 4-year option the automatic one, or what happens?
Sorry, Audrey, I think your sound just went there. Could just that question
apologies.
again, if you started again?
Yeah, somebody's just asking, is there a default option for paying the TWSS taxes? So if an employee doesn't engage with revenue, is the 4-year option the automatic one, or what happens?
Our understanding is the 4 years, the automatic option. That's the default that revenue apply.
Next question there is, if a payment is made directly to the employee, does the employer then have to regross the amount in this year's payroll?
No,
No,
the payment is tax-free. Yeah, you don't have to do anything
outside of payroll. Okay.
Yeah.
The next question there is, does this apply to the childcare sector?
I think this question probably in relation to EWSS and whether they need to, assess the 30% reduction and so forth. Basically, childcare, registered childcare, I think they have to be registered with TWSS.
Yeah.
They don't have to do that assessment at all. They just continue to qualify for EWSS.
Okay. When calculating turnover for Jan to June 2021, is the EWS grant to be included in calculating this figure or purely sales?
No, you don't have to include the EWSS grant.
Yep. The next question there is, what is the comparative period required for businesses which commenced trading late in 2019 for assessing a 30% drop?
Yes, good question. And there is a lot of information up on the revenue website in terms of the qualifying criteria and how to assess whether the reduction in turnover applies to you or not. Basically, in this particular case, I'll just read it out actually. The reduction in turnover, of course, customer orders between the 1st of July and 31st December. Sorry, hang on a second. I'm not reading this right, am I? You're basically looking at your projections. Sorry, Audrey, can you fill in for me here? I'm just looking for something here.
Would I move on and then come back to
it? Sorry, I think I have it here now. Period from the date of commencement of 30th of June when the business commenced trading between the 1st of January and the 1st of May 2019. So your projected turnover customers orders from the 1st of January 2021 or date of commencement 30th of June 2021, where the business commenced after the 1st of May 2019. So this is compared to what projections may have been if COVID-19 had not occurred. Now, again, this is kind of an open calculation that you're doing here, and it has to be done in good faith and all that sort of thing. And basically, you need to work out what the projections would have been for the 6 months to the end of June 2021, if there was no lockdowns or so forth, and then compare that against what your actual performance is going to be with the lockdown and has been up to date. But yeah, as I say, there is good information on the revenue website on how to work these things out, and they do actually give some examples in their PDF documents as well.
Okay. There's quite a large number of queries in relation to the the period and all of that, so I think it might be best maybe just to move on to some different questions, because you said, Paul, there's a lot of information there online. So the next question. In relation to an employer paying an employee's tax liability on the TWSS payments, is this available to directors and proprietary directors also?
Yeah, again, there's really no distinction between employees and directors, apart from determining whether they qualified in the first place. But I mean, that's in relation to this particular question, I don't see an issue.
No. Somebody's just asking, what is the eligibility marker for EWS each month? So I suppose that's automated by the software. Once you tick to say that an employee, you're claiming EWS for an employee, it's automated. It's literally a payment code on the PSR, so you don't need to do anything further, to make sure that that's included. The next question there is, does the employer need to register a second time to be eligible to go back on the scheme if they stopped claiming the subsidy in December but were back on it in January? So yes.
I suppose it depends. If they deregistered, will they need to re-register? Yes.
Yes, yeah. And I think Revenue wants you to deregister when you deem yourself no longer eligible. Isn't that fair to say, Paul?
Yeah, I know that's their preference, and I know there was a question there about if somebody doesn't know whether they're going to be qualified for the scheme again the following month. should they just untick everybody? I suppose that would work, but you know, revenue's preference, and I don't know what the implications would be if they found out you're doing anything different, is that you do deregister and re-register.
The next question there is, if a business has been closed in January and February and opens in March, can they register for EWSS then? So yeah, I suppose you can register at any point. Yeah.
Yeah, once you qualify under the criteria that, you know, revenue specified at 30%, etc.
Okay, the next question there is, if an employee who is if an employee who's related to the an employee who is related to the owner eligible for EWSS? I suppose this comes back to the connected employees, Paul.
Yes, yeah.
So, provided they were.
Yeah, again, there's.
I was going to say, provided they were on the payroll at some point between the 1st of July 2019 and the 30th of June 2020. Isn't that fair to say that they'll qualify?
Yes. Yeah.
Okay. Somebody's just saying they've taken on a new client who didn't complete 2020 returns to revenue. Can they still complete this return through Thesaurus, or do they have to complete online with revenue? So I suppose you can still do the payroll, you just will not be able to retrieve any RPNs for 2020 because they're not, you know, revenue only have them available until the 31st of December, but you can certainly send the payroll submissions. The next question there is, do you submit a zero payment via PSR to revenue? I suppose it's preference really, Paul, isn't it, whether or not you send zero PSR or choose not to. Revenue, I suppose, don't mind either way.
Yeah.
The next question, there's someone going on maternity and they're being paid the difference in salary. How will this work with EWSS? So I don't see any issue there, provided, I suppose, as per their, you know, terms and conditions of employment, they're due to be paid while on, while on maternity leave. There's no issue there in using EWSS for it, and it'll be determined then by the wage limits.
Yeah, it's what actually goes through the payroll that determines whether they're eligible for EWSS. You know, if they're receiving maternity benefit on top of what goes through the payroll, that's nothing to do with, you know, working out whether they're within the limits or not.
Yeah, and I suppose going through the payroll won't affect a maternity claim where it would affect, you know, a PUP payment.
Yeah.
So the next question there, can a non-taxable addition, for example, subsistence, be paid? So this is obviously while, you know, paying EWSS or claiming EWSS.
Yeah, well, but payroll is being run as normal. That's the main thing, you know. So obviously things like mileage claims, etc., you know, they can be put through as normal as well.
Yeah.
It doesn't affect the. You're just going to say it doesn't affect the limits because the limits are worked out in the gross pay, you know, the gross taxable pay.
Mm-hmm. The next question there is, when employees sign off the PUP and back on payroll, how long is it generally taking revenue to adjust their tax credits and tax bands? This is an interesting topic, isn't it, Paul?
Yeah,
I suppose the important thing to note here is that the pandemic unemployment payment is paid in arrears. So if an employee was to return to work, for example, next Monday, they will receive their PUP payment on Tuesday for this week. So you would expect that if they're paid wages next Friday, you know, the tax credits and cutoff points wouldn't have been adjusted yet, but I would expect them to be adjusted in time for the next payroll.
Yeah, I think they get a feed. The revenue get a feed from DSP, something like twice weekly or something like that.
Twice weekly, they get closures, yes.
Yeah.
But I suppose it will catch people by surprise for that first payment, you know, when there's zero credits and, you know, a largely reduced rate band.
Absolutely, yeah.
So the next question there is, if an employer has opted to pay the employee's tax liability arising from TWS, is there a time deadline by which this should be done? So at the moment, they're saying employers have until the end of June 2021. So it may or may not be extended, but that's what it's saying at the moment. The next question there is, do you have to have Connect to have payroll on another computer?
No, not at all. It's probably a lot more convenient if you have Connect, because as I say, it does, work out whether somebody has worked on that employer file and whether you no longer have the most up-to-date version of it or not. But yeah, using things like Dropbox or OneDrive or stuff like that, that can facilitate it as well. So there's no issue there.
The next question there is, I have not submitted our projected turnover for January to June 2021 yet. When does this have to be done? And is there a specific form to be used when submitting to revenue? Can this be done through Ross?
There's no requirement to submit anything like this to revenue. It's only if they perform maybe a check at some stage, they might ask you to show how you've worked these things out, how you worked out your 30% reduction and your rolling sort of assessment of the situation. But there's no submission. I think it was in one of the papers at one stage that I think they report these things had to be submitted to revenue, which was totally untrue. It's only if you're asked. Yeah.
Another one in relation to paying the employees' taxes. Do you enter this anywhere on Thesaurus? So no, but as Paul said, if you do want to, you can use the non-taxable edition. But this person's asking, do you record it on 2020 payroll? So if you're paying it now as a non-taxable edition, it would be on your 2021 payroll, but not really through payroll. Yeah, somebody's just asking there, if an employee has already discharged their TWSS liability through reduced tax codes in 2020, can the employer reimburse them for this liability?
Yeah, I would feel they can, yeah. I don't see any issues with that.
Oh, really? It sounds like they don't have a liability that they managed to, I suppose, pay it throughout 2020.
Well, it'd be a bit unfair, I think, for them not to be able to, avail of this particular, I wouldn't use amnesty, but concession on revenue's part, that if they have suffered, through reduced tax code in 2020, I don't know. Okay, I have to say I don't know, but I can't see why not.
Yeah, it might be just safer to check with revenue, because on the end of year statement it'll show that there's nothing owed, which is what you're supposed to use to pay that money. Yeah,
but at the same time, if you do a calculation, of what the actual liability was because of TWSS, I don't see why you just couldn't use that, a spreadsheet that you've worked it out. It would be I think it would be unfair that they wouldn't receive it. So,
Okay.
But yeah, as you say, maybe just to be absolutely certain, check with revenue.
I'm not sure that they can say that Paul said it was okay. So the next question there is just, if the company has 6 employees on EWSS and the income has reduced overall by 30% and the employees all qualify for €350, what if one employee does emergency work and gets paid a normal wage? Are we still entitled to claim the $350 for him as well as for others? So I'm a little bit worried about the reference to qualifying for $350 here. I suppose it should be just normal wages.
Yeah, everybody should really be on. No, I was going to say everybody, I think, should be on normal wages if they're still employed, because it's only you only get the $350 or EWSS subsidy in relation to pay between certain limits. So presumably that's the normal pay for those employees. So I don't fully understand the question that why would it just be one.
The fact of saying if one employee does emergency work and gets paid a normal wage, I kind of feel these employees are not working. But yeah, as we said, the subsidy is related to the wages you're paying to the employee. It's not that you work out what an employee is entitled to.
Yeah.
Okay. So another question on paying the employee's tax liability. So if the payment that is is the payment that is being made directly to employees from employers in respect of the TWSS liability not taxable in itself? So I think we've already covered that, Paul. It's not subject to BIK or anything.
no, it's a one-off concession, I suppose, for this particular circumstance.
Yeah. The next question there is, I'm wondering if remote work allowance is facilitated in Thesaurus. So I suppose it's facilitated as far as you can put it in as a non-taxable addition, but you would need to calculate it yourself.
Yeah.
The next question there is, if the EWSS has been claimed in error, do you know how to pay back the PRSI credit to revenue? I can see an option in payments to repay the subsidy. So I would feel, Paul, if it's been claimed in error, you should send a submission, indicating that you're no longer claiming it, and the statement should be updated by revenue then, shouldn't it, for the PRSI credit?
Yeah, I would feel that that's what would happen, yes.
Okay. Yeah, I think you touched on this question earlier on, Paul. Somebody just asking, can they just tick and untick instead of the deregistering? So I suppose we've covered it that revenue would prefer you to deregister, but we're not sure of the implications, I guess, if you don't.
Yeah.
Yeah, a couple of people asking, will the EWSS be extended beyond March 2021? So I think we all expect it to, but we don't know when it's going to be announced or.
Yeah, I know. I think I heard an interview with Pascal, the Minister of Finance, in which he said the supports would be extended beyond the end of March. Now, I don't think EWSS was mentioned specifically, but I suppose as EWSS is the main support out there, you would imagine that would be included in that. But we don't know when to. I suppose everybody's very unsure about how things are going to pan out over the next few months.
Yeah. Just one person saying that they've stopped.
I was going to say revenue are always the last to hear as well. It's amazing in some of the calls we have revenue, they'll find the things through the RT website before they hear it from the department.
Yeah. So just somebody there saying that they have staff coming off PUP, back to work, credits, etc. still not correct, and it's 2 or 3 weeks ago. No help from revenue or social welfare. So that's a little disappointing. I suppose I wouldn't expect it to take that long.
Yeah.
So just looking at trying to filter out the non-repeat questions. Somebody just asking, I suppose, can an employee get a pay rise on EWSS? So I suppose, Paul, as long as it's contractual, that they are entitled to get it, so there's no issue with that. Sure, there isn't.
Absolutely not. And again, we get the same question sometimes if somebody is close to the upper limit or somebody just over the upper limit, can they reduce to below that limit in order to qualify for EWSS? Again, if they say their work has been cut back a bit and, there's genuine contractual reasons why their pay has been reduced to below the limit, that's fine, as long as it's not something that's going to be repaid to that employee at a later date. It's not, it's not being sort of contrived, that there's no issue.
Yeah, perfect. Just a couple of people asking, if the EWSS payment they're receiving is more than what they're paying to the employees, will revenue take this amount back? And I think Rachel might have covered that. So, I mean, they don't. It goes that way. Sometimes you'll get more, other times you'll get less, but you won't need to pay that back. I think a lot of the questions remaining are kind of questions that we've already covered, and a huge amount in relation to the eligibility based on the turnover, etc. But yeah, I think a lot of them are ones we've already covered, so we'll probably finish up there.
Great.
Yeah, I'm just going to say to Rachel.
Yeah.
Sorry, Rachel, I was just going to say to you, just in the follow-up email, it might be no harm to include that PDF that revenue have, because the first part of that PDF contains an awful lot of examples on how to to work out the 30% on the different scenarios. So I'd say it might be good to include that in the handouts or whatever that you include with the follow-up email.
Yes, we'll add that into the email. So yeah, thanks Audrey and Paul for managing the questions today. I know there was a lot of them to get through today, and there's, I'd say, easily hundreds more that haven't been answered in today's webinar as well. But thanks everyone for joining us for today's webinar. And as we mentioned there, we will send out a follow-up email later today with a link to the recording, a link to the slides, and we will include those useful resources as well. So thank you. Bye.
Thanks everyone.
Thank you,
Bye bye.
everyone. Bye. Bye.